can the EURUSD produce that 113 retest? That's what we're talking about in today's video. We're also going to discuss the DXY, and I'll show you exactly what dollar bulls have to do to force dollar strength. All right, guys, so if you saw the weekly forecast, you know about 113, why this is a critical resistance for the euro. But if you missed that video, if we go here to the monthly, this level goes all the way back here to the 2009 high. This is an incredibly significant channel here for the EURUSD going off of these highs. And this area comes in just above 113. Okay, now if we look at the daily, because obviously the monthly is good for a very macro view, but it's not going to tell you a whole lot in terms of your actual trading. Now, in terms of your actual trading, what we can see here from the euro, and we can basically see the inverse of this on the DXY, is that we have some symmetry here from the euro. Okay, we've got these lows down here. And like I mentioned over the weekend, a lot of traders would just look at this and draw a trend line off of these lows. And while that's not wrong, you can take this a step further and connect a parallel off of this high up here, and you get the very early stages of a potential channel with a level right up here close to that channel top that we just looked at. Okay, so between really 113 all the way up toward about 113.50, that's the area that I am very focused on for the euro if we continue to see dollar strength. That's obviously going to be key here. But if we do get that, guys, markets love symmetry. What does that mean? This right here is symmetry, okay? When you get channels like this, parallel channels, this is symmetrical, obviously. You've got the lows down here, and you've got this area up here. Markets love symmetry, and they seek liquidity. Always remember that. So this area could come into play here for the euro over the coming days. But what's going to be key, though, for the euro, and we'll take a look at the DXY next, but what's going to be key for the euro is to remain above this high from back here in December of last year. Okay, so right around 111, all the way up to about 111.40, this high from back here is going to be absolutely critical for the euro to hold above. You can see that we do have some consolidation from last week here, and we've also got this trend line off of these lows through here. Okay, so this entire area is going to be critical for the euro to hold above if we're going to see 113. Obviously, if the euro loses this area and starts to trade below here, okay, especially back below channels like this back here, then that could be bearish for the euro for that pullback. Okay, so this area between 111 to 111.40 is going to be critical for euro bulls to hold the market above this, and that's the only way that we're going to get 113 here over the coming days. Okay, now let's take a look here at the DXY, because I'm going to show you exactly what dollar bulls would have to do in order to force dollar strength back toward 102. So this is where a lot of traders go wrong, in my opinion. And first of all, before we get into that, I do want to show you that this is essentially the inverse of what we just saw in the euro, where we have this parallel channel off of these lows down here and these highs. So very early stage channel, but this is a way to identify critical areas before they occur. Okay, now you can also see where we've got this 2023 low down here that comes in very close to the bottom of that channel. Okay, so we've got the low down here, we've got all these highs. You could draw a trend line here, but if you draw a parallel level off of this low down here from December of 2023, you can see that you do get a confluence of support down there around 99.5 to about 99.6. So whether or not this comes into play, of course, depends on whether or not the DXY bounces from that December 2023 low. So this is why I said over the weekend that, in my opinion, this is not the time to be shorting the dollar. It could work out for you. However, anytime you are shorting into a low like this, typically it's always going to be ill-advised, right? You might get lucky here and there and make some money, but ultimately across the longer term, this is a losing strategy, okay? So what it's going to take here for the DXY is going to be a sustained break below this area down here, right around 100.6. If we get the DXY closing down here, then you're looking at that area between 99.4 all the way up to about 99.6. Now, the only way, okay, and this is very, very important, the only way that the dollar strengthens here, and this is what I mentioned before, where this is where a lot of traders go wrong. They see a low like this down here, and they immediately think double bottom, which, first of all, a double bottom here doesn't really make a lot of sense, just because you have all of this price action up here, right? This isn't a case where you have the market doing this, right? You have all this price action up here. So first of all, a double bottom doesn't make a lot of technical sense. And furthermore, you don't want to just blindly buy from this area down here, because the dollar has been incredibly weak here over the past few weeks. So you don't know if the market is going to bounce from this area. And in fact, it's not even likely at this point. What is going to matter here Okay, and I talked about this over the weekend, but if the market can close above areas like this over here, okay, so we've got resistance now for the DXY for the US dollar based on this low from right here and these closing prices. So you can see we've got consolidation up here, right? This is the consolidation that we saw here for a few days last week. And this is what is going to be critical for dollar bulls. The only way that we see the DXY come up here toward 102 resistance is if it can reclaim this area. Okay, so if we draw this out here, being very conservative, what we're looking at, okay, a level off of this closing price down here. Okay, this is going to be the highest most level that dollar bulls are going to have to reclaim on the higher time frames to force a 102 retest. So as long as the DXY is below this area here on the higher time frames, then it is technically bearish, right? We don't have a reclaim of this consolidation. Now, if we were to get a 4-hour and especially a daily close back above this area, which, let's see, this comes in right here around 101.13. If we get a reclaim up here in this area, okay, a reclaim up here, then it reclaims this range. And the odds then of a move back here toward 102 become increasingly more likely. But again, 101.13, that's going to be resistance for the DXY. And until the DXY can reclaim this area through here, I want nothing to do with buying the dollar. Okay, so just because it's at support down here, this is not enough for me to long the USD. What I need to see is more strength from the dollar and a reclaim up here in this area to force that 102 retest. As long as that's the case, we have the potential for, price action below here, below this low, and a run at that area between 99.4 and 99.6. Okay, so flipping back to the euro, just to kind of wrap up here, this is essentially the inverse of the DXY. So when we look at this area, again, this is going to be the must hold down here for the euro, for euro bulls in order to force a 113 retest. Okay, so resistance up here, confluence of resistance right around 113, and we've got 111 to 111.40 as key support. Anything below this on the higher time frames, guys, would be bearish for the euro in the short term, but hold above this, and we're looking at potentially 113 over the coming days. Subscribe to the channel and click that bell for notifications. Don't forget to join us in VIP, claim your 90% off lifetime access. See the link in the description of this video, or if you're on the website, click on that join VIP link. Trade well out there, and I will talk to you again tomorrow.